Hello and welcome to the April episode of DisruptX, a virtual talk series conceptualized by Misonika. In the past few episodes, we've discussed tech disruptions in various industries, ranging from retail, food, healthcare, and much more. In today's episode, we will address yet another exciting topic that also needs a little bit of understanding. We will discuss the future of digital asset ecosystem. If anything, digital assets are certainly taking the world by storm. In the process, transforming the global financial and investment landscape. But what exactly are digital assets? At their core, digital assets are digital representations of all kinds of objects and their associated value. They allow issuance and transfer of ownership without the need for paper documents. Over to some data now. The number of cryptocurrencies has increased from about 2,000 with a market capitalization of over $200 billion in late 2017 to over 8,000 with a market capitalization of about $1.6 trillion. The reported trading volume in cryptocurrencies has increased sixfold from an estimated $6.8 billion per day in late 2017 to $48.6 billion per day in May 2021. Closer to home, Dubai has recently adopted its first law governing digital assets. It's called the Dubai Virtual Asset Regulation Law. And with it, Dubai and the UAE aims to position itself as one of the regional and eventually global hub for virtual assets. Unsurprisingly, venture investment into the digital asset sector across the GCC is expected to exceed $500 million in 2022 alone. Fueling this trend, NFT and digital offerings at this year's Art Dubai recorded strong sales. A case in point being NFT by visual artist Tyler Hobbs, fetching $220,000 or 88 Ethereum. Now to understand the ground realities, we have a stellar panel of speakers with us today who will help us better understand how the digital assets ecosystem works. Let's meet them after this short break. Don't go too far. Welcome back. And without further ado, let's now meet our speakers. James Fick, Chief Commercial Officer and co-founder Vaultavo, a crypto custody platform. Welcome to DisruptX, James.
Hi, thanks for having me.
Very well, thank you. Jamil Abu-Warde, Director and co-founder of Metcalf.com, a crypto and NFT advisory platform. Welcome, Jamil.
Hi.
And finally, we have Walid Rasuli, Managing Director of Tezos Gulf, an open source platform that addresses key barriers facing blockchain adoption for assets and application. Welcome, Walid.
Hi, thanks for having me.
Thank you so much for joining us on DisruptX today. We'll dive right into the conversation and start with the current state of the digital asset ecosystem. Um, Allow me to start with you, Walid. What are some of those exciting developments that you've seen in the digital asset ecosystem over the past 12 months? Also, if you could tell us, what are some barriers to adoption?
Sure. I mean, so in 2021, there was a lot of DeFi project that came through. Basically, every infrastructure, every blockchain developed either a lending solution, anything that related mostly to financial services or decentralized exchange, where people could trade their asset and participate in the ecosystem through that. We also saw, like you mentioned, a big rise of the NFT space. So with NFT, artists are able to basically globalize the audience and monetize in a way that could never have been achieved before. You know, the audience suddenly became the word that created a lot of hype, as you may have seen, and crazy price that you mentioned just now. I think that, I mean, this market is still immature, so it's going to mature, and NFT will become more of a utility. It will need some utility to be widely adopted. You can maintain such a vertical solely with speculator just buying for selling. With the NFT space, the first thing that came through was gaming and metaverses. Because it was the first obvious way of using NFT. You know, all the digital asset that you can use in gaming became useful, became a good target for NFT, and with that, a lot of gaming came. End of like second quarter of 2021 started a lot of gaming project that surged. And the thing is that now the market is more mature. There's a lot of learning that we draw, like in the gaming space, in the DeFi space. There's more liquidity that came, so a better solution are provided with a better user experience. For example, in the gaming space, real gaming studio are now building projects that are that provide a very good experience for the users. Before, it was most of the game were a ground for speculators of the crypto space. Now you see surging a lot of very cool game that people play to play. Other thing is also that NFT is now used for trying to drag a big community around a particular subject. One thing that you see a lot is using NFT to buy land to protect the environment through protection to emission of carbon credit and so on and so forth. So there's a lot of there's a big evolution coming from the beginning of 2021, where a lot of people were trying to use the tool that were available to launch product in financial services, games to make a quick buck. Now the market has matured much more, and really serious players are coming to offer a very good experience to the users.
Do you see any barriers to adoption at all?
Oh God, there's so many. Like the right now, we're going to talk about it. I think there's the user experience is still difficult for adoption. There's a lot of barrier for a newcomer to get into the space. I'm talking about any tool any tool of Web3 is a bit hard to grasp initially. So it's difficult to get into it initially. It requires quite a lot of education first. The second thing is obviously the risk of fraud and the risk of losing losing one's assets, it becomes a big barrier for people to get into that space.
And we're going to be handling all of that during the course of today's episode. But now I would like to turn to Jamil. Can we hear your thoughts on the same?
Okay. So Waleed has covered, I think, one of the most important factors. You know, when I describe what I do, it's actually learn and launch. And I think anybody who's trying to launch without the learn part is going to struggle for the next year. So I'll give it to you in this way. I started this journey 5 years ago when I had to help a friend give workshops. He launched a product, which was a crypto project, and it was in the newspapers in 2015. And then he was asked by a bank and a management consultancy to come and talk about it. And he reached out to me because I'm very good at communicating and presentation, and my background is media. And I told him my price is to actually go with him. I said, if you get these calls, take me with you. I just want to see what happens in these rooms. And I can tell you, till now, I would say, and I don't know if the guys will agree, I think crypto adoption around the world, in terms of, if you think of 7.9 billion people, we haven't reached 150 million, maybe 200 million. What I'm saying is 2% of the world are even able to invest in crypto today. So 98% of people aren't in. So I think it's very useful to think that with that first. It does not mean that the 2% that are in aren't actually doing amazing things. It's a bit like the internet. A lot of people describe this as the internet of money. And I go back to the 1990s. I was actually in the 1990s working for an internet company in 1999, convincing companies, and I'll use this analogy as a very direct analogy. I'd have to call a company and say, would you like to have a website? And this company would be a farm or a restaurant. And they'd say, I don't see any reason why I'd need one. So a restaurant wouldn't need one. We are in the same place today with crypto. If you talk to a restaurant and say, you should consider using Bitcoin, or you should consider using Tezos as a platform, they haven't got a clue why they would. Now, what I'm going to tell you, and I do believe this because I've seen it happen, is just like the internet. Once a company understands, a restaurant understands that you can have people see what you offer on a menu 24/7, you must have some web presence, even if it's a Facebook page. I will say that it makes life easier for the restaurant. It makes life easier for the consumer. The same thing is going to happen with blockchain and with crypto. It's going to be much easier to deal in crypto than to deal through a middleman. At the moment, the middleman is a bank and payment services. They'll hold your money for up to 3 days, if not longer, just for a simple transfer. So if I want to transfer to a lead, it could happen today, it could happen tomorrow. And if it's overseas, and this, if you think of this as a business to business and then consumer to consumer thing, this is going to be the biggest revolution in money for over 100 years. And this is, I think, where, when you talk about NFTs, I love the fact, so I'll go back to the NFT use case, the fact that NFTs is something that people understand, at least from a media perspective, because everything is on social media. And I think that's going to be a very good entry point. But if you ask me, what will it affect? It'll affect as many touch points as the internet affects today. That's my view, because the only thing missing from the internet communication part is the value. You use the internet to communicate or to sell something, but then you go through a bank to actually buy it. I think this kind of third party is the one that's going to be removed from this equation. So the understanding of two things is what's essential. We're still at the beginning. Only 2-3% of the world actually has picked up on this. But here's the important part for everybody listening and the guys in the room. It's actually the people with the money who are paying attention. The biggest money flow is happening in crypto at the moment. In terms of, if you look at funding, if you look at startups, if you look at any of these metrics, The people with the most money in the world are the ones that are paying the most attention to crypto. And in that sense, it'll all trickle down and become more popular. So I don't know if I answered the question specifically with regards to NFTs. I think NFTs are part of a much bigger ecosystem. And again, I say learning about it is important for business owners, but I think consumers, just like the internet, are just going to be users. And many business owners also are just users. Platforms, and especially, of course, custody. I think I'm leading very easily into James next. When I say holding your value yourself is going to be a new concept for people.
Absolutely. Thank you so much for explaining that so clearly, Jamil. I'll move over to James now and hear your thoughts on the same question.
Yeah, so, I mean, the innovation of the last 12 months within the space, yeah, I mean, I think what's brought the most attention has been NFTs and the use that has been there. And I think actually we're already seeing the utility aspect attributed to NFT projects. I mean, there was a collection of monkeys that suddenly became very, very, very expensive. We even see this now that they have their ape coin, and there is a utility and benefit for being holders of set coins and of a Bored Ape Yacht Club NFT. One of the big sort of innovations that it doesn't really get press, but I have seen it with some of my customers that we are going to be working with, is the application of crypto, and quite a heartwarming example of this has been with NGOs and global charities. Crypto, and actually more as recent as Ukraine, unfortunately, and in Syria over the last year, crypto has been used as a means for NGOs to get money in the hands of people on the ground in territories where they have no other means of getting money to somebody. So the use cases for crypto are going to exponentially grow as more adoption happens. But it's exciting. It's you know, my view is crypto. People have been scared that it was originally associated with bad behavior and dark things, but actually, in reality, blockchain is completely transparent. Okay, you see every transaction, so everything is visible, and everybody who is on the network will be accountable at some point. So, you know, you can never stop somebody being a bad actor or trying to be a bad actor, but you're going to get found out. Whereas in the monetary system today, even the institutions themselves have been bad actors in the past, and there are people who prey on bad actors. You know, I think that leads to one of my first barriers that I believe is that the conception of what blockchain is still turning. I think when people realize that actually it is the visibility and therefore assurance and security that comes with the visibility is actually a very positive thing, rather than people, you know, making transactions in the shadows. That is going to change people's perception. So the perception is the first barrier. The second one, which I think is probably the most important, is around the ease of use and accessibility, which both guys have already touched on. You know, we need in this space, and it's one of the missions of my business, is to coin a phrase, Applefy crypto use. You know, if you have no idea how a mobile phone works or how a smartphone works, but you can be sent the package with the new phone in it, and you can open it up and you can use it almost immediately. It will teach you how to use it. It's very user friendly, and we need to make crypto services, especially for a consumer level, to be very simple. You know, if your grandmother couldn't do it, then you haven't made it simple enough yet. So, and I think with long seed phrases, if you are to sort of flip into you know, custodianship and so forth, you know, people view the ultimate is to hold your own private key. Therefore, you know, not your key, not your crypto. But how can you do that securely and safely? And that's a really big barrier to people. There is a big threat of, well, what if somebody finds my seed phrase? I'm going to lose everything. How can I go about managing that? And these are I think there's a lot of work that's been done, especially with what my business is doing. But when these are accepted by the wider world, that 2% is becoming a lot bigger, a lot sooner.
Yes, absolutely. And James, I would like to stay with you and take your last few thoughts as start of my next segment, which is on readiness. So, how do you see institutions and individuals ready for digital asset adoption? And if so, what do you think will drive institutional flows into the market?
Oh, okay, well, I'm going to use, the stat that's already been used. Only 2% of the world today are involved in the digital asset space, in the crypto space. Well, that shows that both institutions and individuals en masse don't feel like they're ready. I think you have to split the two up. Individuals, it comes down to the reason that, it's not an easy process yet. You're having to use convoluted, long security measures with management on a long private key or 12-word seed phrase. And that to somebody who's technical, that's fine. They're like, okay, I can put my own safeguards, my own ideas of how I can, move money between digital wallets. But to, somebody who didn't see a laptop for the first time until 10, 12 years ago, of which there are many people in this world who are of that, they're scared and they're put off because it just seems very overwhelming. So there's a lot of individuals who aren't ready, and I don't think they'll be ready until it's made simpler for them. On institutions, I think institutions want to be ready. There are a number of large blue chip institutions which are. I think there's a number of I know there's a number of institutions that are playing across various fields that aren't necessarily compliant with, but are doing what they can to be in the space and be involved. The trick for institutions is, by nature, cryptocurrency and blockchain technology was, Satoshi Nakamoto was created to give ultimate control and power to every user of the network. It is a decentralized network, and by nature, every digital wallet, every crypto wallet that is held is supposed to be held by one person, one set of keys, one public address, one person. And when you start using stuff on an institutional level, you start having all of these challenges of, okay, well, do I give 3 people the same private key? Well, that means only 3 people can access that wallet at any given time. Okay, no, we need to create new protocols. So in security, there is sharding of keys, and the custodian side of it, how you protect the security measures you put in place, unfortunately, to be more secure, you make it very inaccessible. And in order to have high level of accessibility, you make it very insecure. And maybe an individual is willing to make that risk, having, okay, well, I'll make it less secure, just so it's easier for me to use. Yeah, that's a solution. But when you get to an institutional level, or even an individual who's got millions of pounds worth of crypto, you're not going to risk it. Well, one, that's not technically my money. It's the businesses or my customers' money. So no, there is no taking chances. So you have that really high set of security, and then it makes it really inaccessible. You mean air-gapped computers, time locks, Faraday cages are used in some processes, sharding of keys, and you'll have 5, 6, 7 people, or departments that can have a sharded element of a key. That is a put off to a lot of the smaller, medium-sized businesses that want to get into crypto. So, again, referring back to Himal's example of the internet, many years ago, and restaurants and farms being talked about. Well, it's that size of business today. You get into space. It's not been built for them yet. not to self-promote, but that's one of the main visions and goals that Voltavo has, is that we answer that problem, that it's an off-the-shelf, very easy to use thing that can embrace all sizes of institutions, not just these large institutions that rely on somebody like Copper or Fireblocks or other custodians with very complex systems. So I don't think they're fully ready, but I think they want to be ready, but the infrastructure isn't there for everybody outside, for the smaller man or the medium-sized business. But that is, and getting that right is going to be the catalyst to mass adoption. And I actually wrote a white paper with two of my co-founders on the mass adoption of crypto, and there's a lot there. It's if you've got a spare 8-9 minutes, it's a very interesting read. It's not published yet, but it will be next month. But it's it talks a lot about this point, and it's, gosh, I could talk about it for an hour, so I'm going to stop because I'm already talking too much. But those are my positions of it, and what will really bring more individuals and institutions into the market.
Thank you, James. I'll turn to you, Jamil. You spoke about a very important thing: education, awareness, and learning. If I could ask you, how do you propose, or how are you already educating potential investors before they start their journey into digital assets? And also, the second part of my question will be, do you see diversification of investable digital assets?
Definitely, on the second part, as in diversification.
Yeah.
But starting with education, the first thing that's going to happen, I think, is people are going to feel, so the term everybody knows is FOMO. Everybody's going to see somebody they know making good money, okay? And one of the reasons, and again, most people are not educated about money in terms of the value of cash. One of the main reasons is cash leads, the way it is today, the system leads to inflation. Inflation means the $1,000 you have today are worth 900, a bit more or less next year. But some people are going to hold an asset, and this can be a relative or a friend, where the 1,000 becomes 1,100 and then 1,200 and then 2,000. And that kind of attention, and I will say this from, anybody in the world knows the difference between the value of a property 50 years ago as opposed to now. And wherever you live, people believe, and this has been a narrative for a very long time, that investing in property is a dream. It's something that if you can do it, you do it, because it maintains its value and it rises with time. The invention that is cryptocurrency now lets you hold value in a very brand new way. So going back to learning, what is going to encourage it is just people knowing that whatever I'm holding could go up in value, or if I just do what I'm doing today, is going to go down in value or go up in value very little. So I think that's going to be one of the biggest accelerators. Bitcoin is the apex of all of this. Bitcoin is a finite asset, and it's a mathematically finite asset. So that's one. Now, in terms of going into rooms with CEOs, going into rooms with even bankers, so I've been lucky enough to actually educate bankers on this. There's quite a few moments where you see them understanding, if you're explaining it simply enough, there's a realization, and that is that there's a problem. The problems are quite a few. One of them is inflation. One of them is just speed of transactions. One of them is the fact that there are so many currencies out there. And these are not problems until you present an alternative. And now there is an alternative. And as I say, people love what they know, and people are resistant to change by nature. And therefore, when you ask about learning, will they want to learn? I believe yes. It's as simple as you could be making your money work for you, or you could be making more money. And that's where, you asked about the variety of crypto. It's not just currencies, but projects out there. The second part, and this is where it's a fascinating technology, it's exactly, again, the realization of what you can do with the internet. So if you go back to a company 15 years ago, think of any company and telling them that, are you using the internet? Today, everybody uses a mobile phone, specifically a smartphone. I'm going to tell you about a problem, something I did wrong. I didn't believe in the smartphone that was a tablet. And let me even show you, a smartphone that's a full screen. I held on to my BlackBerry for the longest time because I wanted buttons, because I assumed the phone is something you send a message with or you make a phone call with. What I didn't realize for a few years is the power of apps. So right now, you use a map to get somewhere, that's an app. You use an app to order food, that's an app. You use browsing of any website. Again, these are all, whether it's a browser, a browser is an app. This realization that we're not talking about currency, so I started the whole thing about learning to do with currency. We're actually talking about two things together, and that is the currency and the blockchain. The blockchain is a new layer above the internet, and it's going to allow for a lot more innovation. And in that sense, that's why you see so many currencies. People think it's just about people trying to make money. What these companies are actually building are new Googles. They're building new Facebooks. I mean, these are just social media apps. But let me say, a new banking, a way of exchanging value. All of these different things. I'll give you random, just again, so people are clear. Healthcare, logistics meaning I want to know where this phone, I want to make sure it came from the factory that built it, and it's not a fake phone. I'll be able to go and track exactly where it came from without having to trust a company, because a company can be paid. But when it's on the blockchain, on the right blockchain in the right way, the ones that are going to win are the ones that give consumers or people or businesses transparency. And this radical transparency is not something we've had for a very long time and in very few occasions. But when we do, as humans, we'll go to where it's going to be of more value to us. So a business would love, and let me give you farming. Would you, anybody listening, you yourself, would you love to know where the food on your table actually comes from? Blockchain allows you to look at a barcode and know that it's guaranteed that it came from a local farm or a farm without chemicals. Today, you're not too sure. Very soon, you'll have that option, and it's an option, and people will tend to go for that option. So there are 18,000 plus projects on the blockchain now. You mentioned 2,000 back in 2017. There are 18,000, and they'll grow. These are as simple as as many internet apps out there. You'll get the same amount in blockchain. The combination of that plus a value of coin, and let me throw this out there before we go to Walid. Imagine if Amazon decided to launch an Amazon coin. Amazon, where you buy your stuff. You wouldn't need the dollar, you wouldn't need the dirham, you wouldn't need the rupee, because you'd be dealing in Amazon coins. And the only reason this hasn't happened yet is they haven't figured out a way that they can deal with the regulations and all of this and banking. But the moment they do, and the moment they're allowed to ignore banks, I can see no reason why we won't be dealing in Amazon coins, as well as many, many others.
That's such a fantastic example. Thank you so much, Jamil. And my next point actually would have been regulation. So I'll turn to Walid and chat with you a little bit about regulations, because that's what's required for a solid foundation. So when we think about regional regulations like the recent Dubai Virtual Asset Regulation Law, do you see these guidelines sort of accelerating adoption of digital assets?
Yeah, of course. I mean, it gives a lot of comfort for players in the region to have a solid regulation to come in, and we've seen it in the past year or so. A lot of players are coming because they see a good ground for them to foster having a good regulation framework. In the you know the between Abu Dhabi and Dubai, we've seen a lot of attempts, effort to provide some framework for players in the region to come and foster. There was a regulatory sandbox in Dubai, in Abu Dhabi, and even in Bahrain that were created. And out of this regulatory sandbox, there's so many startups that graduated and now are operating. I'm talking about the likes of Smart Crowd that operate in the fintech industry. In the real estate crowdfunding space, where they fraction real estate ownership and sell it to as low as 500 dirham per share. You see so many of these startups because they know there's a good ground to operate that are coming through. In the past year, we've seen it. The second thing is liquidity, because we have now a lot of we have the ground for digital asset exchanges platform that are coming through and are fostering. We know that digital asset have now a place for trading, a place to go in and out of the fiat currency. So it's another avenue for another good ground support for all the players that are building on the digital asset to feel more comfortable, because they know that they have a way back in the traditional system. And for whether it's for Abu Dhabi, Dubai, or Bahrain, and now also in Saudi, we see a lot of the regulatory framework that is coming and that are offering these framework for these players. The next thing would be probably NFT, and I know there's a lot of effort by the government, by the regulators in the region to adopt and to shape a framework for NFT. And I think it's just the fact that they're pushing to that direction gives a lot of confidence for the players to come in. And it's a virtuous circle. Players are coming in, contributing to the ecosystem, and that ecosystem foster even more. So yeah.
Absolutely. And how do you see these regulations also sort of reducing potential security risks?
I mean, so the regulation comes a lot of compliance requirement, right? We're talking about KYC, AML. For one of the things that the risk of fraud and the risk of money laundering has always been the ground for digital asset exchanges. But now when you set up the right safeguard, for example, in digital assets platform, trading platform, when you know who is trading with you, you know where the money has been made of. When you know he's not in a blacklist of some government, so you feel much more confident. These are the safeguards that have been built through the regulatory framework that now allow us to be more confident in trading and buying those assets.
Thank you so much, Walid. On that note, I am going to start the next segment with some data. So global cybercrime costs are estimated to grow by 15% per year over the next 5 years, reaching $10.5 trillion annually by 2025. So if this data is to be believed, how can market participants then sort of safely engage in this new digital future? Why don't we start with you, Walid?
We have discussed about it. First of all, education. There's still a big barrier to entry for anyone getting inside this space and learning how to be more cautious about managing a digital asset. But one thing that I want to say is that this space has been built by technologists. So like when you start the space, there's a lot of stuff that are being built that are not necessarily tailored for the end user. It's just like a set of tools that only very expert and people who are very knowledgeable in the space can manipulate. And what's missing right now is the layers of product managers that uses this technology to build with product. It's already started, but for full institutional adoption, there need to be a better UI, better UX, a better custodian services, because like we do have these custodian services, but it's so tedious to use. So I'm looking forward to your solution, James, because I've been using a lot of these solutions. It's been so tedious, and I can only imagine people who are newly coming and they're like completely lost about how to use these stuff. So increasing, better educating people in the space, increasing the adoption also by providing a better tooling, a better product that would improve the user experience, and also custody, because the custody of digital asset is the one single most important aspect of the security or the risk faces for losing your asset.
I think that's quite an opportune moment to bring James on and ask, as a custodian, how are you supporting these investors in their digital asset investment journey?
So actually, Voltavo is a custodian solution. We are not the custodian. What we do is we have created, without going into what would end up being an elevator pitch, we have created a platform supported by some unique hardware, which is patent protected. And this fundamentally allows any institution and any individual to become their own custodian. But all the points that have been discussed already are the main challenges. Custody in crypto and blockchain it's more than just security, because it's in order to have security, you have to then how easy is it to use? And we talked at the top of this that ease of use is one of the main barriers, if not the biggest barrier, to getting the everyday person involved in crypto and the smaller sized, medium sized businesses, or the less technically minded huge institutions. And custody services, I wouldn't say custody solution, custody services are the absolute center point of this. Getting that right is suddenly what will invite and allow so many more people to participate within this space. We want to empower anybody and everybody, every business of every size, whether you are a Fortune 500 business, whether you're a central bank. Our technology has been even designed for a central bank, but it can be used for an individual on a stand in the street. The principle will be the same, the ease of use will be the same, and the security will be the same. Then we've got to have this thing where it is very easy to use, and there are some other challenges as well around custody that haven't really been addressed. Again, it plays on the security versus accessibility. How do you do a transition of custody to somebody? So in an institution, for instance, you've got one private key for one wallet. Yes, you may shard it up and have people having multiple areas of it and creating some sort of multi-sig wallet. But what if somebody dies? How do you pass on that key to somebody else? And today, every means of doing that requires somebody to have something physically written down somewhere. So although you can be very safe and you can have whatever part of your key physically written down somewhere and then put that in a safe in a mountain, great. But you still have to get that is still accessible at some point. And, we don't, passwords today, although, that we have for our emails or, our work logins, yeah, we've become more smart to make them just, our children's name and their date of birth. But you create a password that is simple enough for you to remember, but smart enough that it's not easy for somebody to gain access. And now we have also, to add on to security, we have two-factor authentication, and this is just stuff that every consumer and user uses today. And two-factor authentication has become almost a standard for anything important. So banking today with online banking is all done like that. So those ideas are old ideas. Crypto has the ability to encompass all of that from a security measure, easy, and have something that is two-factor or even three-factor. And the private key itself is essentially a piece of the code. If you're going to make it so that somebody has to remember, a password this long, it's always going to be a barrier. And removing the need to know or have your private key written down anywhere, but at the same time remaining to have sole access and security or a multi-sign access to a wallet is the Shangri-La, is the promised ground. So yeah, that's what I view. I mean, that's been our mission at Voltavo, to solve that. And I believe businesses like ours, if not ours alone, will be this driving catalyst behind significant change and mass adoption.
Thank you, James. Can we hear your thoughts on the same, Jamil?
So your question is specifically to do with
market
security.
Participants, yes, how can they engage in this new digital future? Of course, security is the centerpiece here.
So for me, the idea is you have to separate the technology from just people. The worst thing about security in every organization is the people, because the easiest thing to make a mistake, yes, technology has a part to play and sometimes technology can fail, but in most cases, and I don't know if James agrees, it's the people who are the ones that are the weakest link, right? So when it comes to security, crypto is incredibly secure in terms of some of the coins, and let's stay on the level of the ones that are known. So something like Bitcoin and Ethereum, they are the two biggest. Anybody can buy it with a credit card. And here's the thing. When it comes to an individual, that person has to take a few steps in order to, first of all, write down the pass number that's issued and make sure that they keep it somewhere safe. So in terms of security, it's security from themselves. If they come a year down the line and think, where's that password that I had? If they haven't written it down or kept it somewhere safe, that money can be gone. So this introduces a new level of responsibility. There are ways where you can have another third party responsible, and that's okay. But there's that risk of that party can remove it. But I really like what James was saying, because really the bigger problem, you're saying, why isn't there bigger adoption in terms of companies and governments, etc.? It's the idea that the responsibility of this very easily moved value has to have a new way of thinking about it and a new way of sharing what we're calling the keys. So what's going to have to happen is there are companies which will offer you the solution. You're going to have to go and talk to them, so like Voltavo. But really, I think you're going to have to get people to understand, and unfortunately I think it's going to be by mistakes happening, and hopefully my desire is for people to make mistakes when it's earlier on and smaller, and there will become a best way forward. I do think, however, having said all of that, because of how humans are and because of how people like to depend on a third party, I do think this is an amazing opportunity for third parties to actually help people with their coins or with their assets. And these are the companies that are going to, again, through trust and through time, they're going to be able to offer a service, and that service will be worth a lot of money for the company, but also will be worth money for the people using it. So for example, if somebody offered me security and they will take care of it, and all I had to do is 2% or 1% of my assets, I might think, you know what, I'd rather secure 99% of my assets with this one company, rather than risk taking on 99% of the responsibility, if not 100% of the responsibility, and thinking what's going to happen. And one more thing, and I don't shy away from talking about this, has to do with what if somebody who has the keys died, right? So few people think, I just put $10,000 in Bitcoin. What if you got run over by a bus the next day? And the reason I'm comfortable talking about this is because of the past 2 years and what we've had. You've seen people, you know, their life went all too soon. And on many occasions, some of these people actually had cryptos. On the bigger occasions, and there's a Netflix documentary about one, but some owners of exchanges die, and everybody's keys on that exchange are dependent on the owner. So I think these kind of solutions, we're in a very new industry. We're lucky that we're at 2% adoption globally. I think there's going to be a real problem when we're at 5, 10, and 50% adoption.
Sure, and that's a great point. I'll take that as my closing question, Jamil, and ask you, what's that one message that you have for early adopters in this space?
So I think you should try. There's the best way for me is trying and not being afraid. Try with as little as $10. But make it $10 a week or $10 a month and start to play around. And I call it a learning fee. So even if you lose your password and you've got $100 in Bitcoin, that's a lesson that you've learned. It's like taking a class for $100. It's gone forever, but you won't make that same mistake again. So your fear, get over your fear and prejudice of this is something that's new. Remember the first day. And as I mentioned at the beginning, my first the mobile phone, actually, it was something that I got married, and it was only the girl I married, my wife, is the one who bought me one because she was bored of me being the last guy on earth with a BlackBerry. Don't be the last person on earth who hasn't tried it. Be the first person within your friends and family. Start with $10, $20.
Thank you so
That's
much.
how you learn.
Thank you for that beautiful message. Can we hear your thoughts now, James?
Yeah, I mean, it's you learn from mistakes, and it's better to start small rather than go all in and then make those mistakes because they hurt a lot more. There is, don't be afraid to do that. But it's, I think there's an interesting, there is a progression, a natural progression that we see from people in this space where they start off using people like Coinbase, Binance, who look after their crypto for them, like a bank looks after your money. So you don't actually own that crypto when you keep it in a Coinbase and Coinbase's main wallet on the exchange. It's pooled in Coinbase. Now that's not a bad thing. It's a higher risk to you because if somebody steals that wallet or gets access to that wallet of within Coinbase, which we've seen happen before and happened to crypto.com, etc., then your crypto could be stolen along with a number of other people's if it's just in that wallet. But it's definitely more secure maybe than you may have holding your own wallet, not knowing what you're doing, and how do you use a hot wallet on your own. But it's a start. And once you get comfortable with understanding the landscape of crypto, farming, yielding, all these kind of things, staking, buying NFTs, then you look to start having your own wallet, your own private wallet, start managing your own keys. It's so for the novice, baby steps, but institutions, especially big players who want to get into it, they don't have time to kiss, 15 frogs to find the prince. They need to have the prince out the gate. So for those people, I would say come and speak to the specialists like me and the others on this call. Whatever area that you're uncomfortable in, there are plenty of leaders out there in this space already who can educate you. And it's just don't be afraid to ask and look what's out there, and don't assume.
Thank you so much. Walid, can we hear your thoughts, please?
Yeah, I think we kind of like heard it all. I think for me, it's yes, I agree. I think you should start with the likes of central exchanges, dipping your toes, buying some Bitcoin, Ethereum, some Tezos as well, of course, and just learning as you go, investing as little as possible, only what you can lose. And also participating in all the discussion in social media, in Telegram, in Discord about different projects. This is how I actually learned. I went in the different project I was interested in, and I started chatting with sometimes the founders, sometimes other investors. And the learning curve is quite steep. It's very hard at the beginning, but once you reach a certain level, that comes quite fast. You learn much faster afterwards. So. Really participating in the discussion and having some skin in the game that incentivize you to put some effort in it.
Thank you so much, Walid. And thus, we wrap up yet another fantastic episode of DisruptX. Massive thanks to our speakers for taking out time, joining us, and sharing such incredible insights. Huge thanks to our audience for tuning in. Please do send us your thoughts, feedback, and questions on our LinkedIn page. And as always, this episode wouldn't have been possible without the support of our team, led by Upasana Barua. Stay tuned for our next episode in May, which will tackle tech shifts in travel and hospitality sector. Until then, take care and Eid Mubarak in advance.